Welcome to This Explainer. Today, we're unpacking something that affects literally every single one of us. Before you could even read a balance sheet or had any clue what the stock market was, actually, even before you earned your first dollar, your financial destiny was likely already programmed. It's kind of wild, but it's a startling psychological reality. By the time we were just 7 years old, our subconscious relationship with money was almost entirely baked in.
So think about that for a second. Was your financial destiny programmed? Now, obviously, our parents loved us. They were doing their absolute best just to survive and protect us, right? But simply by watching them stress over bills or maybe catching those hushed arguments at the kitchen table, we inherited their subconscious money scripts. And here's the thing. They operated on rules meant for an older world, a world of absolute scarcity and hypercaution. And when we drag those outdated childhood rules into our modern digital economy, they don't act as armor, they act as chains. So today we're going to break them by deconstructing 4 toxic money beliefs you probably inherited from your family.
Okay, let's dive right into myth number 1, the scarcity trap.
This is arguably the most common toxic inheritance deeply ingrained in almost every middle-class household. We've all heard this growing up, right? Money doesn't grow on trees, or, do you think I'm made of money? Now, on the surface, sure, this sounds like highly responsible parenting. It teaches kids not to waste stuff, but subconsciously, it implants a deeply toxic seed. It literally tells a child's developing brain that wealth is this elite, finite, and vanishing resource. It conditions you to believe that there's a fixed amount of wealth out there, and if someone else gets a slice of the pie, well, you lose out. You start viewing the entire world through a lens of lack, which effectively caps your true potential with fear.
So let's contrast how these mindsets actually operate out in the real world. First, you've got the scarcity loop. People trapped here focus entirely on pinching pennies. It's that frustrating mindset that makes someone irrationally drive 5 miles out of their way just to save 2 cents a gallon on gas. They're completely ignoring the fact that they just wasted 30 minutes of their irreplaceable time. On the flip side, we have the abundance loop. An abundance mindset realizes that in the modern landscape, wealth is generated by solving complex problems at scale. Instead of hoarding, this empowering mindset focuses on generating value through leverage. Instead of constantly asking how to protect a tiny pile of money, they're asking, what high-value problem can I solve for the market?
Which brings us to myth number 2, the illusion of financial safety. Our parents' generation really worshipped the traditional savings account. They genuinely believed risk was the ultimate enemy and safety was the holy grail. But when we look at the mathematical reality of these strategies side by side, wow, think about keeping cash in the bank. It has a perceived lower zero risk, sure, but the real outcome over 15 years, it's a guaranteed loss, literally guaranteed. Now contrast that with a broad market index. Our parents definitely saw this as high risk, but the reality over time is compounded growth and actual wealth preservation. Now, you might be wondering, why on earth is cash a guaranteed loss? Well, it comes down to a very specific, harsh mathematical reality. 6 to 8%. That is the real inflation rate we're dealing with. If you're keeping your wealth in cash just because you're terrified of the stock market or business failures, inflation is quietly, but surely, stripping away your purchasing power year after year. And the crazy part? Meanwhile, your bank takes those exact same deposits of yours and uses them to fund high-return investments for themselves. Treating cash as absolute safety is actually choosing guaranteed financial defeat. See, our parents taught us to fear volatility because they confused it with risk. But as we're defining it here, volatility is actually just the price of admission for long-term financial growth. Real financial risk isn't investing in an asset class that jumps up and down a bit over time. No, real risk is relying entirely on a single corporate paycheck and keeping your life savings in a currency that is intentionally designed to lose value every single year. That obsession with safety, it's ironically the riskiest path you can possibly take. All right, let's move along to myth number 3, subconscious wealth sabotage. Now, this one is snaky because it operates almost entirely in the shadows of our minds. It's the moral demonization of wealth. Think about all those movies showing rich people as corrupt, or those casual dinner table comments taking pride in being not rich, but at least honest. This creates a totally devastating psychological conflict between your conscious ambition and your subconscious guilt. Consciously, sure, you want to build wealth, achieve freedom, secure your family's future, but subconsciously, you've been programmed to believe that becoming rich means becoming cold, greedy, and unlovable. And what happens when you have this internal tug of war? You self-sabotage. The very moment you get a windfall of cash or hit a highly profitable phase in your career, your subconscious goes into full panic mode. You'll recklessly spend that money on things you don't even need or suddenly lose focus. all just to get rid of the wealth so you can remain perfectly aligned with your family's humble moral identity.
We have to completely reframe this narrative. And I love this quote: "Money is not a moral agent. Money is a megaphone. It is simply a tool that amplifies exactly who you already are. If you're a greedy, insecure person, money just makes you a loud, dangerous tyrant. But if you're a generous, kind, and brilliant person, money gives you the power to heal, to build, and to uplift thousands of lives. Wealth isn't proof of corruption. It's proof of resourcefulness."
And finally, we have myth number 4, escaping the time trap.
So this is probably the most stubborn inheritance of all. It's that old industrial-era employee blueprint that says you absolutely must trade 40 hours a week for a steady paycheck and just repeat that cycle for 40 years. Notice the linear equation of this traditional mindset. Income equals your hourly rate multiplied by the hours worked. Because of this deep conditioning, we think the only possible way to earn more money is to just work more hours. But here's the crucial point. If you want to double your income, doubling your input is a mathematical dead end. Why? Because you only have 24 hours in a day, and your physical energy has a very real finite breaking point.
Now check out the alternative, the wealth brain equation. Here, income equals value created multiplied by system scale. Modern secret millionaires and wealth creators simply do not sell their hours. Instead, they build or buy assets. We're talking software, digital media channels, equity in businesses, things that completely untie their income from their time. They build systems that work for them while they are literally sleeping. If an asset can scale globally without requiring your physical presence, your earning potential becomes mathematically infinite.
Now for the most important part of this explainer, rewriting your financial DNA. Breaking the generational curse of financial scarcity is a deliberate, difficult, psychological operation. I mean, you are fighting years of childhood programming here, but it absolutely can be done. There are 3 concrete steps you can take to break the curse and build a genuine wealth brain, starting today. First, audit your internal vocabulary. Catch yourself every single time you start to say, "I can't afford that." That phrase literally shuts down your brain's creative faculties on the spot. Instead, replace it with, "How can I earn enough to afford that?" That simple flip shifts you straight from victimhood to active problem solving. Second, separate love from strategy. You can deeply love and respect your parents while completely rejecting their outdated financial advice. They did the absolute best they could, but you belong to a totally different era. Honor their sacrifices by being the one who breaks the cycle of financial anxiety for your entire family line. And third, invest in your mind first. Before you buy a single stock, crypto coin, or piece of real estate, invest in books, mentors, and high-ticket skills. Because honestly, a scarcity mindset can lose $1 million inheritance in a year, but an abundance-driven wealth brain can lose everything and build back a fortune from scratch within months. The greatest asset you will ever own is the space between your ears. Your parents gave you your past, but your mindset determines your future. It's time to stop just surviving and start scaling. So I want to leave you with this provocative question to chew on. Which money belief did you inherit from your family? Take some time to identify those invisible demons operating in the shadows of your mind. By recognizing them, we can break the cycle of financial anxiety together. Keep analyzing, keep learning, and start building your wealth brain today.